Welcome in, guys. My name is Ryang Gonzales with Becker Properties. I'm joined with Cruz from eMortgage Capital. Got that right?
Yes, you did.
Yeah. We want to talk to you today about saving some money in these tough times, but also what you can do, with taxes and insurance in the meantime, because there's a ton of things that people just often forget about, don't think about when it comes to taxes or insurance. With insurance premiums going up so high right now, if you're not shopping your insurance every year, you definitely should. And then a lot of people don't know, you can protest your taxes. Taxes come out every year in April. You can protest them up to May 15th. So that's something that everybody should be doing. And with counties trying to keep up with taxes, sometimes they're overtaxing you right now because houses have not appraised like they used to appraise in the past couple of years. So that is something that everybody should take advantage of. And
Man, I got to tell you, I'm just going to be very straight on that. So last year, I got my tax letter and I was pissed. I mean, it was a stupid number, and I'm gathering all these reports. I even got you to do assessments of what my house is probably worth, and I was ready to go to war with the city or the county, right? So I go down to the county. I file my protest. Lady walks me through it. I'm in and out of that office in like 8 minutes. I'm like, that was too easy. She goes, somebody will get back to you in a month or two. Well, then I get a letter that says, hey, we're running behind, and this is now, I think, July or August.
Yeah.
Then I get another letter that says, we're still running behind. Why don't you just tell us what you think your house is worth?
Yeah.
Okay, so I just lowered it by $100,000 just to see what would happen.
Mm-hmm.
And I got a phone call. The guy goes, why do you think it's $100,000 less? And I told him, it's a 40-year-old air conditioning system. It's an old roof. Somebody did some damage to the house when they removed the wall and never reinforced the structure correctly.
Yeah.
And I gave him early quotes.
You talk about stuff that they can't see, and then they'll take
Well, here's
that
the
into
quote.
consideration. Yeah.
He goes, Mr. Cruz. He goes, I'm busy. I'm slammed. I got 100 more people. Done. $100,000. Come on.
Sheesh. They were running super behind last year.
Yeah.
Well, even the year before.
Yeah. I mean, if to not do this and potentially save your, because that $100,000 saves me, I want to say, $2,000 a year in taxes.
Yeah.
Now that's real money.
It's real money. Yeah, it's real money. There was an instance with my brother recently, and so every year, probably around February or March, you're going to get a letter from your mortgage company if you're short, and it says, hey, you're short in your escrow. So your mortgage company pays out your taxes and insurance every year for you automatically. But if you're short, they're going to go ahead and pay it, but then they're going to basically bill you, and they'll divide that payment by the 12 months or the rest of the months in the year or whatnot. But he was short like $7,000, and we were like, what? That doesn't even make any sense. His house is only worth probably $270, $260. So check this out.
That was a funny number because somebody,
dude, it was insane. This is why I wanted to talk about this today, specifically for this instance, because so the insurance went up. I already figured that insurance probably went up. You didn't even check it; it just automatically renewed, which you should be shopping every year. Well, the insurance wanted, so we heard. Insurance wanted to get out of Texas, so they started raising up premiums like crazy. They doubled his premium. He was already paying $2,400 a year, and for that house, that's still kind of high. But they doubled it to like 40, almost doubled it. It's 44 or 42.
Well, mine last year before I shopped, it went from $2,000 a year to $6,000. The lady that I refinanced in November of this year, because she had never filed a claim on her house, ever. The year she files it for her roof, they changed her bill from $2,000 a year to $17,000.
Sheesh.
Well, she didn't read the letter. Mortgage company just paid the bill, and her mortgage payment went up on something like $1,500 more a month. She couldn't afford it. She was going to lose her house. Thank God we refied her and got her out.
Yeah.
Because the mortgage company was fighting her on redoing the calculation for the escrow.
Dude, my brother's freaking out. His payment went up $1,000. So we're like, dude, what's going on? So not only did the insurance go up like crazy, he had never looked at the alerts coming in.
Yeah.
Hey, your insurance is about to renew. It's about to renew. Because so he's with my insurance guy. So they send out an alert. Most insurance do, right? They're going to
They
send it
are
out.
very good about it.
They're going to send it out 90, 60 days ahead. Say, hey, your insurance is about to renew. It's going to automatically renew at the new premium,
Regardless of what- yeah.
So if you don't say nothing, you're not shopping it out. Most insurance companies are not going to do it for you. You have to be alert to that. So that's one of the big things. And he dropped the ball on that because it renewed back in like September. So he's been paying that high interest premium for that long. Okay, so we're going to switch that for sure. Get him a really low premium. We're going to take a higher deductible on the roof and the
Yeah, I did too.
a claim deductible. You can do 2%, 5%.
I did, yeah.
I mean, yeah, it drops your premium crazy. And then we found out that his homestead dropped off, and we didn't know why because it's supposed to stay
That
on.
happened to me. That happened to me once.
Well, we found
it just disappeared off my record.
we found out because it's supposed to stay on for the life. As long as you're there,
Right.
you're there. You never have to file ever again once you file. Well, he had a girlfriend that he bought the house with. She filed the homestead under her name, and which is perfectly fine. So they got the homestead, but for some reason they took it off because, well, she ended up deeding the house to him, and so I guess because she was the one that filed and signed the homestead, they took off the homestead. And so when he called the county, they're going to reimburse him. They're going
Right, they will do. They will go
to
backwards.
reimburse him, but
I think up to 2 years.
yeah, we didn't see that. So the last 2 years, he's going to get reimbursed, and so he's saving like another $2,500 that way once he gets that credit back. So like, but that's a huge bill. Like his insurance still went up regardless, the homestead, and then the taxes. He's going to protest them this year, but it's just things we don't really think about, especially the homestead. You don't think about the homestead falling off, but like look at your tax bill when it comes in.
I got another one for you. So a lot of mortgage companies will end up selling their loans, right? You know, when you do a loan with a mortgage company, they originate the loan and then they typically sell it to an investor or a lender.
Yep.
And then that servicer might have what's called a sub-servicer. And they're the people that actually just send the letter, right? And collect the payment and process the money.
Stuff gets lost in that.
So what happened to me was I bought a house and I think I closed in April, right? And then in June, they sold the loan. Well, I make my payment. They sell it again a month later. Well, my payment never caught up to the new company.
Oh, my God.
Well, I didn't notice it got refunded to my account. Well, then I get another letter a third month later saying that it's been sold again, and now I'm 2 months past due. My credit score went from like 760 to like 550. I freaked. I was hot.
That's bullshit.
It took me
Honestly.
3 months to fix it because nobody would call me. Nobody would get involved. I'd be on hold for hours. Finally, I just wrote a couple nasty emails to all the CEOs of each of the mortgage companies threatening to file a complaint with the CFPB. And I explained the story, and I showed that the payments had been posted and then reversed and then sent back like a month later. How was I supposed to know? Again, it's our responsibility to keep track. I get that. I really do. But man, it's one of those things that being a homeowner, if nobody tells you to beware,
Yeah.
it'll freak you out.
No, that's a freak situation. It really is, because that doesn't usually happen. Like, we know they sell them, and maybe multiple
It's
times.
usually once, twice.
But not so close together
Not
like
back
that.
to back to
yeah,
back.
That's,
Yeah.
And then, of course, your payment's going to get lost and then the shuffle.
It was not easy to deal with. That's why I ball, bro.
Well, see, that's why I wanted to talk, because a lot of my clients on the regular, they do hit me up every April because the deadline to protest is May 15th.
Right.
So a lot of them will contact me in April once they get their tax bill and be like, hey, can you run some comps real quick to see if my house is worth less, because I think I'm being taxed too high. Regardless, once you go on that website and protest, you can do it online at first. You can tell them what you think your house is worth, and they'll send you an initial offer. They'll lower it, send you an initial offer. If you don't like that, then you have to go in person. They set up a meeting with you to where you need to show them comps or some type of evidence that your house is worth less.
And
maybe
on
a
how
recent
busy they are,
maybe a
like I
recent
said,
purchase.
They did me over the phone. Now I went through a list of what was wrong with the
Yeah,
house.
they made me go in, and so like there are some people that are being taxed higher than the amount they're purchasing the house at right now, and that's kind of common too. And so
I'm working on the deal right now.
You
I'll tell
can
you about that in
show
a second. Yeah.
can show the contract and the purchase agreement, the HUD statement, your CD, and then they have to lower it at that point because you purchased it for less. But there are many instances where a CMA will work, and I can run that for anybody.
So I'm doing a deal right now. There's literally 2 houses next door to each other. One is $399 and one is $480. Well, the family wanted the one that was $480 because it was done. I get it, right? But when I found out what they had done, being a flipper too,
Yeah,
they only did floors and replaced the granite in the kitchen.
they didn't do much.
That's it.
New paint, maybe.
It didn't look like it.
No,
No. New floors and the granite, right?
staged it.
Not really. And they wanted $80,000 for what looked like maybe $25,000-$30,000 of work.
Wow.
And so the house that was $399, the family they ended up making an offer. Not only did they get their offer accepted, they got all of their closing costs
Nice.
and title. Oh, and here's the kicker. Even though it's selling for $400, the county taxing the property at $430. So now that they're going to get it for the $399, exactly what you said.
Oh, yeah.
They'll be able to take that contract and that HUD or that final disclosure, that CD, take that to the title office and say, hey, look, you're overtaxing me. This house is only worth $399,
Yep.
not $430.
Yep.
And they'll have a legitimate argument.
Yeah.
It's the little things, man. Every penny matters, especially with what's happening in the stock market.
It definitely does right now too. Yeah, with taxes and insurance, you're getting hit by both sides, and then what's happening in the stock market, everything's dropping in value, dollar's getting weaker, everything. Yeah, there's a lot going on.
I have a friend of mine. We were talking, and he said, Carlos, I lost so much money in the last 3 days that I don't think I can do anything and retire anytime soon. And I'm like, bro, you're 55. What are you talking about retirement? I said, we're going to be working until we're 70.
You're early.
It is what it is.
Yeah, you're young, man. It's early. I wanted to talk about something else. So some people don't think about the PMI,
Right.
the private mortgage insurance, and that you can remove it if you're with conventional loan, right? You don't have to worry about it with your VA. But run us through the process of removing PMI. I know it's a hassle.
So when you do a loan originally, if you put 20% down, you have no mortgage insurance. That's the slam dunk, right? Well, the rules are once you hit 78%, it should come off. However, these mortgage companies make it like an act of God to get it off. They're going to give you these forms that say, oh, no, we have an agreement that says you have to be at 75% within a certain 1 year or 2 year, or you have to be at 76% if you're after 2 years to 5 years.
Yeah.
They have all these little catches, right? But here's the problem. Getting somebody to talk to you about that.
Dude,
You and I were at the same mortgage lender that did our loans.
I can't get nobody on the phone for it.
And I was round and round. It took me 3 months to get an email. And then they finally said, oh, well, you have to get your house appraised.
So they don't send somebody out. They want they want you to do their appraisal.
So it's
yourself?
like, oh, you can either do a realtor appraisal, which they'll pick the realtor, or you can get a third-party appraiser and pay him $500 and do that. Now, I'm going to do the appraiser route because we've done so much renovation with the property.
Yeah, you are good.
I want an actual appraisal, and then I'll be able to push back and say, hey.
So they have a thing about 2 years. They said you can't drop it within 2 years.
That you can, but they don't. They make it very hard to do it.
Okay.
I mean, why couldn't you?
I saw something about 5 years too on their website. But you've had your house for 3 years?
Yeah.
Yeah, so they're gonna let you do that appraisal. That's good. I'm gonna look into that too. But it's very hard. It's supposed to drop off automatically, like you said, at 78%. And I know on the CD, the closing disclosure, usually it says like after 8 years.
Yeah.
And so it's gonna take a while. Like
if you let it do it naturally, it
takes forever.
You've wasted money.
Yeah, mortgage company is gonna
gonna make money on it.
They're gonna bank on that. Even if it's just like $150 a month. I mean,
and that's the problem. People go, "Oh, it's just $100." No, it's 100, 150, $200
If you can get off in 2-3 years versus five,
6,
versus,
7, it's
versus
just gross.
5 more years, 8 years, yeah. Yeah, it's definitely gonna add up. You could put that in some type of mutual fund account or index fund or something like that.
Buy gold bars.
Do something, buy something.
Yeah.
Cryptocurrency.
Well, not right now.
For the next
No, you saw that drop.
yeah, for the next 5 years though. But imagine you putting that 150 in something each month.
You're putting it towards yourself.
Yeah.
You're putting it toward your kids.
Yeah.
You know, that's more important than paying a mortgage lender more money so he can go buy another Porsche. That's just gross. It happens. You know they are.
Yeah.
These independent mortgage bankers buying Porsches, claiming that they're broke. Come on. It's just not a good time.
Well, that story you gave us last time, man, about the CEO.
Yeah.
Yeah, that's crazy, man. It's crazy.
It's a rough life.
Mm-hmm.
But yet the employees take the cut.
A lot of people taking a hit right now.
Well, a lot of loan officers. I mean, even now, especially with CFPB going away. Well, not so much going away. Let me back. That's a bad choice of words. With the CFPB being gutted, you're having a lot of mortgage companies doing things knowing that there's really limited to no oversight. So the way Dodd-Frank was written, which is one of the laws regulating mortgage lenders, it makes it illegal for the mortgage company, when you work in the retail market, to adjust your compensation. You know, in a normal world, as a broker, I can charge whatever I want because it's my company and I'm getting what's called broker paid. Whereas these retail lenders at all these loan officer shops and independent mortgage banks, they're lender paid, and so they cannot negotiate their compensation. Well, these mortgage companies that are offering 2% comp to these loan officers, well, they're having to sell really crappy rates. Yeah. But now with so much of the CFPB being gutted, now they're getting sneaky. They're cutting loan officers' compensation. They're allowing it. But instead of the company taking the hit, the guys that don't produce the loan, they're going after the loan officer who actually does all the work.
Just to be more competitive, right? Yeah.
It's a gross manipulation. And these loan officers that accept it, I don't get it, man. I mean, it's your business. It's your loan that you're giving them. They need to take the hit, not you.
Yeah. Maybe they don't know any other way, you know?
It's a shame.
Well, how long were you stuck in that world?
8 years.
Yeah.
8 years. Well, there was a lot of misconception about being a broker. There was a lot of thoughts of risk that weren't there. Not to mention,
they got kind of a bad name, right? For a while?
For a little while, yeah. And I think one of the problems that I was always concerned with was moving to a broker. I didn't realize that there was what's called a hybrid option. Moving to a broker and becoming a full broker, you have to establish your own relationships with all the lenders that you want to do business with. Well, being a hybrid broker, the mortgage company, eMortgage, they've already got 165 relationships.
They're the broker and you're the rep, basically.
Right. But it allows me to still be self-employed. I'm 1099.
Still allows you to be a broker.
And it allows me to have all the flexibility and all the tools and all the lenders, and I don't have to do the work.
See, that's awesome right there.
It's just one less headache I don't have to deal with. One
thing I heard just coming into this business with brokers, they were always just so busy and very uncommunicative. Like it would have the cheapest rates, but it was very hard to get a hold of them, or they're not the type of person that's most likely going to hold the client's hand, like not good for first-time home buyers, or someone that needs to be like really catered to because they just don't know the process.
Yeah, but here's the funny part, man.
James with My Insurance Group with a brief interruption to this podcast. It is currently being shot in the My Insurance Group studios. So My Insurance Group is a local insurance brokerage. We are 5-star rated, and we provide policies for homeowners, auto insurance, and commercial business needs. So if you're looking for a great insurance agent, check out the number in the link below. We will definitely get you an insurance quote, or if one of your friends or family members needs a great insurance agent, keep us in mind and keep the My Insurance Group podcast studio in mind when you're trying to shoot video. Thank you.
And who was pushing that narrative? the loan officers at the mortgage banks selling the crappy rates.
Yeah, of course. Well, not only them, but also they were pushing it on the realtors, and that's how. Like when I first got into the business, I was learning from everybody.
Well,
Realtors, loan officers.
You have these big mortgage banks. They're paying some of these realtor brokerages. So it's allowing them to drive business to themselves and then feed the broker some revenue. They're buying marketing. They're buying this, they're buying that.
Oh, like paying for leads or
which is illegal.
Or
it's a RESPA violation.
Or they're throwing some type of like mixers for
them. But they find a way
or,
to get around it.
Yeah, they find some way to compensate them.
And so obviously they're pushing the narrative to use those lenders. I mean, there's a real big brokerage shop here in town that's bought part of Zillow. And they have a relationship with the mortgage and the real estate. I get it. But how is that competitive? How is that getting the best rate or the best deal or the least cost for the customer when you're literally trying to control every aspect of the transaction?
At the end of the day, the customer gets screwed on that.
I agree.
Yeah, that is true. It's not really a free market at that point when you have somebody that big doing that.
I got one for you that I just saw the other day, and I hadn't seen it in a while, but it's popped up with 3 different brokers, real estate brokers. So compensation is negotiable, right? We all know that. And in Texas, the listing agent agrees to a certain compensation from the sellers. And then based on that agreement, they also decide with the sellers what percentage is going to go to the buyer's agent, right?
Yes.
Okay. What I'm seeing is more brokerages, real estate brokers, charging a transaction fee, $4.95, and they're saying, well, they have to have a transaction coordinator and they have to pay him or her for this work. And I'm thinking, what? You drew up the contract, you send it to the title company, the lender's doing all the work getting the transaction closed and funded. Why do you need to make $500? Is it just another way to gouge a customer that doesn't know? To me, it just seems shady. I mean, if I just started throwing $500 fees into my loans, I'd get called out.
I'll tell you what it is. It's only going to be with agents that do a lot of volume because they need a transaction coordinator to help them.
But why isn't that a cost of business?
It doesn't have to be. No, it doesn't have to be. It's a cost of business for them because they're paying the transaction coordinator. And so
if you're doing 10 loans a month.
I have seen it though.
10 loans a month.
I have seen it.
You're telling me your coordinator costs you $5,000 a month?
They pay them per loan. But they're probably only paying them $300 a transaction.
See where I'm going with that?
So they're probably making money on it, but they might be paying them more. I'm not sure.
I don't know. It just seems like, I mean, for me to do business,
I don't do that.
I know you don't.
But
this is why I do business with you.
I have seen it. I mean, for sure.
I do loans, and if I need another processor, that's on me.
Yeah.
That's my cost of business. Why? Because if I want to do 3 to 5 loans and I want 1 LOA, I'm covering that cost, right? But if I want to go do 10 or 15 loans, enough loans to need another person, then that's my cost of doing business. Now, I can pass some of that to the consumer, right? But then at what point am I no longer competitive?
Yeah, definitely.
Or I can lower my expected net margin on that deal because I'm making more doing 10 or 15 loans.
Yeah. I don't think customers actually know that that's going on until it happened.
This customer didn't know.
Yeah.
It didn't show up until the CD.
Yeah. And they're like, what's that about?
Yeah.
What's that fee?
They were hot.
Yeah. It should be in the listing agreement. If they're going to do that, it should be in the listing agreement.
Yeah, but
along with the commission.
I don't know if
it might not have been
presented clearly.
Yeah, it might not have been explained
or explained clearly. Yeah. But my family was not happy at the closing.
Yeah.
And what should have been a happy day for them, they were pissed about $495 that they didn't know about.
Yep. Yeah, it happens.
I mean, we didn't even know about it till literally the day of closing when the title company goes, "Oh, you need to add this fee," and we're like, "No, we're not." We push back. We're like, "We're not doing it." We're like, "Well, it's a required fee." I said, "We're not requiring it," and we would have to resubmit it for review, and the buyer's agent was like, "No, it's got to be on there." They agreed to it. I'm like, "Okay." Well,
So it was on the buyer side.
yeah, and now we have to get this document. We have to resubmit it. We have to get it blessed once again by underwriting, and it delayed about 4 hours in the closing, which more so aggravated the family.
You should definitely know about that. It's taking like extra time, and I'm getting charged.
They were pissed. They were pissed.
I'm sure. That's one thing. Like I try to fully disclose everything up front. Err on the side of caution whenever you're dealing with these transactions and people. And
yeah, you have a good reputation. I've never heard you.
This is their money, livelihood, and they're trying to save every penny they can, for moving costs or furniture or whatnot. And I mean, rates are high. Like everything's more expensive right now. Yeah. So it's, you got to stay competitive. And if it's, I don't know.
We're at a time where there's a lot of fear with the market. There's a lot of fear with retirement. There's a lot of fear of unemployment. There's a lot of uneasiness with the administration that's making decisions. There's a lot of unwillingness to let it see how it plays out. Without going into too much political, emotional point of view, at the end of the day, we spend more in this country than we produce. And that's not a successful business plan. Now, how do we make it right? Man, that's what our politicians are elected to do, right? And so we have to take the good with the bad. We have to stay positive because it does work out. It will get better. I mean, this is not end of days. I mean, you look at the financial crash in 2008 when literally your neighbor and their neighbor and their neighbor were losing their homes every other day. That's crazy. It's not the stock market crash in the 1930s where literally, half the country was out of work and, people were in line for food. I mean, people are still in lines buying iPhones. I mean, I get that it's hard.
Yeah.
But tell me a time where it's supposed to be easy.
Yeah. Well, there are some people going through hardships right now.
Agreed.
Like I just had a client that I helped close a house with. He was going through foreclosure. He was going through divorce. And so
those are always hard.
Oh my God. So the court put everything on him, like the financial bearing on him or burden on him to pay everything, the house payment, the cars, credit cards, everything. And so this guy just didn't pay. He's like, I can't afford it because he had to find another place while the wife and the kids lived in the house. He's like, I can't afford it. So got behind on his payments probably like 6 months, at least 5 months before they started sending him letters. I had already listed the house though. Mm-hmm. We just weren't getting much traction on it. Because it had a foundation issue we found out later on. And that really hurt us. So we had to drop the price and had to be competitive. Well, we ended up getting out of it. We ended up getting a contract and getting out of it. But before we did that, we tried to submit for a loan modification because there's a couple of things that you can do when you're in that situation. He had an FHA loan. So with an FHA loan, what it'll allow you to do is it'll allow you to, if you get approved for it, you have to basically state your hardship and why you're going through it or whatnot, why you can't pay. It'll allow you to create a second lien. And so you can pay both the mortgage and that second lien, whatever you're behind at the same time. And they make it real affordable for you. Like they'll stretch it out like years so that you can.
So what happened to it?
Well, so we sold it. We didn't have to.
Oh, you didn't have to go through the modification.
We thought, so it was still on the market when we applied for it, and we thought, oh man, we're gonna have to extend this. We're gonna have to extend the foreclosure somehow. So we asked for an extension, but at the same time, he applied for a modification. And so on a conventional loan, that's something they'll do, a modification, basically either refinance it, maybe they'll stretch you out. I've heard of 40-year notes. Have you heard those?
Yeah.
Yeah, so they'll stretch out maybe 4 years, or they'll modify the loan somehow. They can tack on the
At the end of the loan,
the
I think,
amount
yeah.
owed at the end of the loan, and then reinstate you for just a fee. So there's different options, right? I was looking through the paperwork, and by law, they have to send you these options. Like whenever you're going through this, they have to send you what these options are. So FHA allows you to do that. And I think VA might allow you to do the same thing.
Most of the lenders, when you call them, there's one of the it's like one of the first prompts. If you're dealing with a financial hardship, press this number. The word of warning, though, when you go down that path, it's hard to get back out of the path if things get better for you quickly.
Sure. Yeah.
So
I mean, you've already missed multiple payments,
so
dude.
It's expensive.
Your credit's going to be scarred for a while.
It's better than a deed in lieu. We were talking about that a minute ago.
Yeah.
So a deed in lieu, if you're not aware of what it is, it's basically you surrendering the property back to the bank, and the bank accepting that and basically nullifying the note.
Instead of a foreclosure, but it's the same thing, basically.
Instead of a foreclosure, correct. However, when you go to rebuy another home, which you will eventually rebuy, the impact is almost similar to a foreclosure. But they don't tell you that.
I would think the underwriter probably looks at it like the same way.
Well, no, it's not just the underwriter. It's the Freddie and Fannie and HUD guidelines
Okay.
that define what to do if it's a deed in lieu within, X amount of time, and what we can do after that. Now, we can do a non-QM loan, but even a non-QM lender may have issue with that.
There's one other option, and it's probably just as bad, but you can do a short sale. And basically what you do is you apply for it as well. It's like your last option besides the deed in lieu. And you get approved to sell the house for less than what it's worth. And so, yes, it avoids a foreclosure, but it's probably looked at very similar.
I would assume so.
As a foreclosure, but it's another option to not get foreclosed on. The foreclosure process is pretty, man, it's pretty hard. It's pretty hard on the family. It's really probably psychologically, it's really damaging as well.
I can only imagine.
So there's just some options that you can do. I would say first, if you're behind, look at calling your lender and try to get a modification, or if you have that FHA loan, try to get that second lien and get approved for that. But also, there's an option to sell the home because you might have some equity in the home as well. A lot of houses do, unless you just bought it a year ago or something like that. But it's worth looking into. I think a lot of people are. I mean, I would only imagine super embarrassed, right, that they're going through this foreclosure.
There's a lot of elderly people that could do a reverse mortgage.
That's an option too.
And
they might have had their house for 20 years.
I think I talked about it last time where the daughter was fighting it, saying, well, this is my inheritance. And I was pretty candid with the daughter. I mean, it needed a new foundation. The windows were broken. It was cold. She had no central air. The house was probably wired from, 100 years ago. And the mom had a home that she could have gotten a reverse mortgage, literally renovated the home, had enough money to pay her taxes and her insurance until she finally passed away 20 or 30 years down the road. She would have been fine. She would have had no bills, none. But it makes no sense how people don't think about executing.
They just
on
don't
a
know.
Very simple plan.
They don't know, man.
I know.
That's one of the reasons why we're doing this. I want to get the word out there that there are options for hardships too, and people in situations like that. There was another situation a while back where I had some guy going through a foreclosure, and he didn't hit me up until maybe 4 months in when he was already getting letters. And so I'm like, dude, we gotta sell this fast. Luckily, he had some equity in the house, so we sold it. It closed the day before auction. I shit you not, it was crazy because we saw the date come in through a letter, and we're like, dude, whatever it takes, we have to close on this house. And the buyers wanted all this stuff during the inspection. They wanted a new AC, and I'm like, bro, I'm gonna get somebody to do it. He's gonna get paid at closing. You're still gonna walk away with about 20 grand. He's like, no way. I'm like, yes, less, but we have to be on board. You have to be on top of this.
It's gotta be perfect.
Yes, everything's gotta be perfect. The house has gotta be clean. Move out on time. We have no other time. you're about to get foreclosed on, and oh man, that was a crazy situation too. But luckily he got out of that situation. But that's one of those scenarios where he got a little lucky that he had equity in the house. But I mean, it's very common these days. So I definitely want to put that out there. People just need to ask. You know, it like I said, I know it's tough to ask for that help, and it's embarrassing. Maybe, you know, you feel like you can't trust anybody, or you don't want to be put on blast or be called out or whatnot. That's the world we live in right now. It's kind of tough, but there are people going through those hardships. So
Well,
definitely,
I think my takeaway is if you don't know a realtor, call 3 of them, right? Get some different ideas from 3 different people.
interview 'em.
If you know a realtor,
Yep.
call your realtor, because you know what? They're going to know the lender that can help. They're going to know the title company that can help.
Yep.
They're going to know what insurance brokerage that can shop them for a better rate. Somebody needs to be your advocate, and a great realtor really is that person.
I got one other scenario. I met this lady yesterday. She's a general contractor, but she also has a business where she lends to people that need help with remodeling cost.
Yeah.
And there was a situation where she was dealing with a lender where, as is, the house was going to lose, like they were going to lose money on it because they just didn't have a lot of equity. But she found a way to put enough money into it to get even more out of it to where they still walked away positively. I think they walked away with like 20 grand at the end of the day because of the certain modifications that she did in the house. And she's like all in interior design or whatnot. I'm going to try to have her on the show.
I think that'd be cool.
Yeah, next week or the week after. But she has some cool financing options for that money to do the repairs and able to get the value up. And like you said, that family earlier, that's what came to mind. They wanted the $480,000 house versus the $399 house because the bells and whistles, right?
It was done.
And dude, that pulls everybody in. If you know what you're doing, you have the right scheme, right colors, maybe you stage it. Certain things will really draw people in, and it works in the best benefit of the sellers. And right now, that's so huge because, like we were saying last time, the months of inventory is up like crazy. So
Yeah.
anything you can do to stick out, maybe it's just even to sell the home because people are not looking. If they're looking to move in a home as their own occupants, they have options now.
Here's the thing that I noticed. The family that owned the house that they ended up buying has owned it for almost 15 years. The family that was asking the higher price with the small little bit of renovation they did, they only owned it for a couple years. So we don't know if they maybe bought it and had to overpay to buy it. And now they need this much money to get out of it. I don't know. We don't know their story.
Yeah, a lot of people
But
overbought.
nobody makes, I mean, it makes no sense to be literally next door to somebody and charge 80 grand more for the house when the renos are maybe worth 20 grand, 30 grand.
Yeah.
There's no logic behind it. So I suspect there's something
Yeah,
more.
the comps got to make sense, right?
Right.
The comps got to make sense. You gotta have good comps for this situation to work with the remodeling, right?
And we know people were overpaying during COVID.
Yeah,
Myself included.
big time.
It was
man.
either get the house or not get the house.
Yeah, the year later I did.
I even ran into one of my neighbors, and he's a contractor in the neighborhood, and he was like, "Hey, man, you're the house with the wall, right?" And I'm like, "Yeah." He says, "You know, we were competing for that house." I said, "No, really? I didn't know that." He said, "Yeah, we wanted that house, but apparently your offer was a little bit bigger than ours." And it just, I mean, I was willing to, look, my wife wanted it.
Did y'all talk about what you went in at?
I did not want to tell him how much I overpaid.
It's worth a lot more now, though.
It is.
Yeah.
At least it caught up quickly.
Yeah, it caught up.
But yeah, I mean,
I would be interested what he put in because was there like 15 offers on the house or?
oh man,
there was a lot, right?
It was listed on Friday and it was sold by Sunday.
Yeah.
And I want to say there was probably 10 or 15 offers. And
I remember you asked me about that house too.
I did not want it.
And I was like, dude, I think your offer's good. Yeah.
And we got it.
You got it.
Yeah, I mean, I think I want to suspect that the nearest offer was probably 10 grand lower than ours. But again, where are you going to get a house with an acre of property in San Antonio?
Yeah. Right by Hills and Dales.
Yeah, yeah. With no HOA.
That's a plus. All right.
So what else you got going on for the week?
Not much. Just following up with a couple of clients, man. I need to get that list for you.
Yeah, and I need to send you the. So one of the things that our team has been doing is buying leads from some of these mortgage companies that are overcharging their veterans with really bad rates. And so we've been trying to focus on, actually we have been focusing on acquiring these leads, making sure that those phone numbers are legal to call through the database that searches to see that they're not on a do not call list.
Mm-hmm.
And then that way we can reach out to these families and say, hey, listen, let's try and save you some money. I mean, we talked to one of my guys was talking to one of the families the other day, and I mean, just buying 1 point, which is 1 percentage point of the loan amount, was going to save them about $300 from their original rate, which was like 7.5.
Yeah, you know what? I want to talk more about that for sure. How's your guy doing?
He's really getting more organized and setting up an SOP and a process and a method of speaking to everybody. I think once he has that rhythm going, our next stage is obviously, the email communication and the text messaging and the voicemail drops. But I think I should be ready to add another 2 people.
Yeah.
Probably by May.
And a lot of these veterans, you're probably saving what you would say like $200 to $400 a month, or maybe more.
I think $200 to $400 is a reasonable number to save without overspending on the rate.
And that's refinancing at a lower rate. And what else are you able to do for
So
can you explain the Earl?
Yeah, so it's just a refinance, right? Interest rate reduction loan. It's only applicable to veterans.
Specifically for them, okay.
We're not.
What benefits do they? Is it lower like original?
The whole goal is to lower their rate or lower their term, and save them money. And
are the fees lower?
Yes, a lot lower.
Yeah.
We're not having to reappraise the home.
That's what it. Yeah. That's
now
huge
some
plus.
lenders will not pull a credit report. Others will, to price the loan for a better rate.
That's right.
Okay. I want to say that one of my buyers from last year, his mortgage company offered to refinance his loan at like 675, and he calls me and he goes, "What can you do for me?" I go, $599. I said, and I'm half the price of what they're charging you.
That was recently, right?
Yeah.
Yeah.
Anyway. So again, dealing with the broker is going to always get you a better deal. Bottom line.
So the FHA loan has something like this too.
It's called a streamlined refinance.
Similar, very similar.
The ugly part about FHA versus VA.
Okay.
FHA does not allow you to add any money to your loan. So in other words,
VA you can roll in closing costs. FHA you can't.
And with VA you can waive your escrow. So like in Texas, right? So if I refinance my loan,
is that something only done in Texas or only available in Texas? The Earl?
No, it's national.
Oh, national.
Yeah,
okay,
yeah.
Cool.
In Texas on a VA loan, if I close that loan in April, that means my first payment is in June 1, right?
Yeah.
So that means I didn't make 5 payments towards my taxes. And it means I still need to add 2 more months for the cushion. So on a VA loan where they don't waive escrow, we're adding 7 months of taxes to their mortgage.
But right? Then they're getting credited they're
going to get their old escrow. They're going to
back.
get the 2 months skipped, right? So there's the benefits.
Yeah.
But it's still adding 7 months of taxes to their loan, which really stresses out a lot of families. They don't want to see their loan get bigger. So what do? We, as a broker, we waive the escrow, and now we don't have to charge them the 7 months. The problem is FHA doesn't allow you to waive escrow.
Yeah.
So now I've got a family right now. They're having to bring 7 months of taxes to the table, knowing they're going to get the money back. But if they don't have the money, they can't take advantage of the FHA the streamline.
They need to have the upfront money.
They have to have the upfront money because we can't add it to the loan.
So there's a little bit more difficult.
Yeah. So,
but the cost is still pretty low on those to do.
Yeah, it's always going to be a lot cheaper, right?
No appraisal.
No appraisal.
Okay.
It's a slam dunk loan. We're not credit worthy qualifying them.
You just need some upfront.
We just
cash.
need the validation that it's saving them money.
It'd be cool if you can get some type of bridge loan for that, just for that temporary, whatever it's going to take to get back your escrow, something like that.
What he's doing is he worked an extra shift. The wife, I think, picked up some money, and then he's not going to pay the mortgage payment this month.
So he's saving that.
So that's what he's using to cover the costs.
Yeah. So
But I can help him. Like
a little bit more like moving parts, but
So
it's a
what I'm doing on my deal is I found him a rate that is paying what's called a premium, means it's the lender's actually giving money back towards his closing costs. And I adjusted the compensation on it. And so I'm able to give him almost $4,000 to help him with the closing costs. So all he's really having to cover with is about $3,000.
Okay. Because you can play with the numbers like that.
It's a good part about being a broker.
It's tough to explain all this stuff. I think like we need a real life scenario. So, like it's definitely important for somebody to talk to you if you're thinking about all this, because it's a lot of numbers, a lot for people to comprehend. I think I understand it, but it's just because I'm in the business.
Well, it's. I don't know if you ever saw Tommy Boy. I mean, you can stick your head up a bull's ass and take a look at the brisket, or you can just take the butcher's word for it that it's good.
Yeah.
I mean, I don't ask me to understand contractual law and liens and title holds. I'm not. That's not my bubble.
Yeah, but I think you just need to dumb it down enough for people to like really understand. Like,
Bottom line is call a broker, call a realtor, and ask questions, man, because
definitely
saving money is what everybody needs to be doing right now.
Yeah, we're in the business of trying to save people money too, for sure.
It's tough
man.
times.
It's tough times, man. Like, just as on the real estate side, getting the best deal possible, getting as much closing costs as possible to help your cash to close, and then
even that it's even if my buyer from 3 years ago is to call me and say, Carlos, I'm struggling with my payment, I don't know what to do. Why wouldn't I make the time to help them?
Yeah, it's a conversation.
Let's talk about your insurance. Did you ever file your homestead exemption? Are you protesting your taxes? Are you doing what it takes to save money, or are you giving up and feeling frustrated because you don't know what to do? Again, you got to pick up the phone and call somebody.
Yeah.
You have to.
I think people are afraid to do that for some reason.
Man, I don't know everything, and I pick up the phone.
Yeah.
I mean, it's what we have to do. We have to lean on people. Definitely. Because I'm not the expert on real estate. I do financing.
Yeah, in the beginning, I was asking questions to everybody about everything.
I mean, I can still talk to somebody about an insurance policy at the insurance company, and I feel like I'm getting glazed over when they're talking about this deductible and that coverage. I'm like, whoa, time out. What do I need? Because this is what I can afford. This is what I need.
Yeah.
Let's find a way in the middle that can save me some money.
Yeah. John's real good about that, man. John's real good about it. Hey, this is what I would do on
the entire team there.
On my house.
Yeah, they actually are involved.
Yeah.
And there's some really good brokers, but I've been able to lean on John over the years for help, and he's been honest with me. There was a time when one of the properties that I had, he's like, look, man, I can't get you the coverage that you need. You might want to look around to somebody else. And I was able to find it a little bit cheaper. Yeah. And it helped my dad out. I mean, we just got to do what we got to do.
I think it depends on like the profile overall, but there are certain things like they might do better on home, and then somebody else might do better on auto, or they might do better on like investment properties,
or bundling, or whatever.
Bundling.
I mean, again, you got to call.
Yeah, you got to call. But they did really good on my investment property. I found a pretty good deal on investment property. I had to switch auto. I saved a little bit, but I mean, again, every dollar counts. But then on the personal, they were kind of high, and so they just reshopped it for me and found something lower. So I mean, just basically reshopping stuff. I mean, you never know, because if not, you're gonna get hit with that automatic renewal. And
oh God,
dude, I felt so bad for my brother when that happened, because I'm like, dude,
and look at that.
How'd you not?
I think that is the perfect example of, Look at how close your brother is to you, and he still didn't know.
Yep.
And your brother's an educated man.
Yeah.
It's not like he's 21, just bought his first house. He's an adult man.
He wasn't paying attention to those emails.
We all miss the emails.
Yeah, yeah. The emails or the letters or whatnot.
Yeah. Are we good?
We're
I think
good.
we're good this week.
We're good, man. We're good.
Hey, I really appreciate you making the time, and I appreciate you holding us both accountable to having and hosting these events, because at a minimum, it gives us a chance to try and reach out to more people and just give them another tool, another piece of advice, another information, another choice.
Definitely. We have good conversations all the time. So, I mean,
Yeah.
I look forward to doing this more with you.
Next time we bring the tequila.
That would be nice.
That'd be nice.
Do that on like a Friday or something.
Absolutely.
Definitely need to we're going to get some other professionals in here.
Okay.
I just talked to another lady that does business financing for commercial and businesses and stuff like that. I think that she would be interested to get in here as well. But also that lady that does the financing for remodeling your home before you list it. Or, she's worked with a bunch of people that have their homes listed for months, like maybe a year, and she's been able to remodel them and still net them
And get them sold quickly, I bet.
Net them positive, yeah, and get them sold a lot quicker. So,
Well, that's why I didn't want my house, right? I knew it was going to take a lot of money and a year to get. Had that family done it, though, they probably would have gotten $200,000 more than what they asked for.
yeah,
So I'm kind of glad they didn't.
You'll be surprised at the numbers that she's been able to make these folks.
You said that we can probably get her in here next week?
Yeah.
That'd be cool.
I'm pretty sure.
Okay.
I'll double check with her. But until then, we'll see you.
We'll see you. Thanks, Texas.